Yo, what's up, YouTube? It's Mr.BuyTheDip back here with another video. Since the market is closed today, I still wanted to drop a video to talk to you guys about financial literacy at a young age. Why investing at a young age is very important. A lot of times we're, when we're younger, we make that, 400, 300 bi-weekly paycheck working at a part-time job or whatever, and we build this habit of spending money or buying clothes, whatever, right? And a lot of times we carry those habits with us when we are 25, 26, 27, 28. So and we get stuck in this cycle of just working and working and working and trading our time for money, right? That's what a 9 to 5 is, right? You're committing 8, 7 hours a day to stay away from home, just to make what, 500, 600, $7 a day, which is not bad by all means, but it's like it's a cycle that it's never going to end, right? Till the day you retire or whatever the case may be. Now, I'm going to talk about starting to invest at a younger age with that part-time job, with that 12, $13 an hour job, so you can build those strong habits while you're learning a skill, okay? No matter what you're going to school for. You can go to school for, or you can go to college for, let's say, engineering. You can go to college to learn how to do law or medicine, whatever, whatever you're going to school for, teaching, right? 60, 70K a year, it's not a lot of money, but it's going to feel like a lot when you first get those type of numbers, sent in your bank account, and you're going to start living a lifestyle that you haven't earned yet. Okay. So, financial literacy at a young age teaches you how to save, spend, and grow money wisely. Okay. I was able to learn this at a very young age, and um, when you learn this at a very young age, money works for you. You don't work for money. Okay, that is the number one thing a lot of rich people are doing. That's the number one thing a lot of people have the opportunity to do. When you're younger, you don't have any skills, you don't have any capital, right? Capital is basically money. So you have to go in there, work 8 to 10 hours, 7 hours, 6 hours, 5 hours, 4 hours to make money. When you get enough money, you can just take that money, invest into a business, pay your employees, whatever the case, or take some money, put it into a stock, put it into ETFs, learn how to day trade, swing trade, and then money is working for you. You're just putting down money and you're going to make money off of that, get the money you put in, get the money you made, and enjoy the rest of your day. Okay, that is the lifelong goal for a lot of people. Now, financial literacy build habits to budgeting, tracking, and avoiding debt. Number one thing is avoiding debt. If you're making 60, 70K a year, your car should be nowhere near above that, right? Because it doesn't make sense. It does not make sense. Yeah, you want to get a BMW, you want to get a Mercedes, you want to get these crazy expensive cars, whatever, but you haven't earned that yet. I'm not saying don't get the car. I mean, you can drive a Toyota for the next 5 or 6 years, and once you start your business, once you start investing, once you understand the game better, then you can make those big purchases and reward yourself, right? But a lot of people do these at a very young age when they're making 60, 70, 75K a year, and they go buy a car, they go buy clothes, these crazy trips, and they kind of start chasing a lifestyle they haven't earned yet, right? So I learned this at a very young age, and I'm able to save very heavily to invest in myself, and I'm able to invest in other companies, bonds, ETFs, and master the skill of day trading and swing trading. Okay, it's going to take some time, but give yourself some time to learn it. Okay, if you're willing to get profitable within the first 2 weeks, it doesn't work like that. All right, now helps avoid common money mistakes in adulthood. This is the third bullet point that I'm talking about, because whatever you do at a younger age, it's kind of going to creep up on you and it's going to stay with you later on in your life. Part-time jobs are where this starts. Millionaires are made by stupid expensive purchases. Trade money for money. I just talked about this. Uh, as simple as it sounds, think about it like this. Um, the last month, I'm up 10%. Okay, I got $137 in return. I didn't work for that money. I didn't talk to any customers. I didn't do anything. All I did was I put my money into a stock and I got so and so amount back. That's all I did, right? So when you master the skill of trading, or you master the skill of content creation, you master the skill of um producing a product like hoodies, t-shirts, or coding a website, right? You master some of these skills, you can start teaching people, you can start giving advice, you can start your own YouTube channel. And all of this is essentially going to start trading money for more money by investing and starting up a starting up a shop, starting up a business of your own. So just keep that in mind. Why starting investing at a young age is very important as well. More time equals more growth through compound interest. So basically what that means is when you start investing at a very young age, your money can grow at a fixed rate, or your money can grow by you just working over time. 10 years, right? 10 years is a long time. But if you start investing when you're 30, you're pretty much aiming for, when you're 40 years old, 45 years old. But imagine if you start when you're 20. Imagine if you start when you're 18. Okay, what is your money going to do then in 20 years? Then you have up until 40, right? If you start, okay, let's say you start, I want you guys to look at this, okay? If you start saving $200, okay, every month, in 1 year, you'll have 2,400 to invest. But now if you do that for 5 years, you're going to have 12,000. Okay. Now, if you save 200 a month, or you invest 200 a month for 10 years, okay, for in 10 years you're going to have $24,000 invested, and 200 is a very small amount, okay? So this can always go up. Now, example investments is a simple overview. I'm talking about the S&P 500, QQM, Walmart, Nvidia, okay? So an ETF is an exchange traded fund. It's a basket of stocks. Think about it like this. You go to the grocery store, you really like these apples you see, but you see a basket of fruits where you get apple, grapes, and you get, I don't know, some blueberries. So you're buying that because you get more variety. This is what people do. They buy ETF. If you see the name ETF, that means it's a group of stocks. In that you got Walmart, you got Nvidia, you got Apple, you got Microsoft. You're basically investing a little bit of money into all these companies in the ETF. Now, if you invest, let's say, for 300 a month into the S&P 500, in a year you have 3,600 invested. Okay, let's say your capital goes up, you manage to invest more money into the stocks, right? In 10 years, let's say you manage to invest now, or 9 more years, you manage to invest $450, okay, for 9 years. So you have $48,000 invested in the ETF in 9 years. And that works wonders. You're still young, right? You're 29, 30. You got 50K invested. And while you're doing that, you're working your part-time job. And let's say as time goes on, you build that up to 70, 80K invested. And that is where the money is made. That is what compound interest means, guys. So if I have $100,000 invested, and my investment goes up 50, 40% in a matter of 4 or 5 years, you're getting more in return. More money means more money back. So more money, okay, more money equals more risk. More risk equals more money. If you're only investing $10, okay, you're never gonna get $5,000 back. Unless you're doing meme coins or some other stupid stuff that I don't get into, right? I'm an investor, not a gambler. Okay, now you could do meme coins, right, for fun or whatever the case may be, but I'm talking about real money, real technical analysis. We're not looking at fundamental analysis too much, right? But we're taking these and starting at a young age. Start on Cash App for a few years. Keep about 1,000 to 2,000 on Cash App, right? Learn the game first. If you got the money's gonna be made. As simple as that, right? Prices go up and down all the time. Don't think you missed a run. Okay. When Nvidia went to $900, I thought, oh my God, I missed my shot in Nvidia. Just a few weeks ago, Nvidia was at about 99, 100, $110, and now it's at 137, 138, 131, right? So you're never missing your chance. Keep that in mind. You're never gonna miss a chance because the price is gonna go up and down regardless. Okay. So key takeaways: start learning about money early, because you're not going to make money if you don't know how to work with money. As simple as that. If you got $100 and you're blowing all $100 away, that is stupid, right? Take 20, spend 20, have fun with 20, take the 50. invest the 50 and the rest save it, right? And when you're younger, you have the opportunity to invest more because you don't got bills. That's the number one thing I'll say. If you're 16, 17, 15, 18, 19, right? Whatever the case may be, you're living on a college campus, or you're living with your parents, even better, right? Or you're living with your grandma, uncle, whatever. You have the chance to invest your money. So what are you waiting for? That is where the wealth is made. Get an ETF, sit down, look up videos on which stocks to invest in, do your own technical analysis, look at indicators, uh, and there's a lot of other things you can get into, right? Walmart is one of those stocks that I know how consistent they've performed over the last 10 to 5 years. I have seen how consistent they are. Over the year, they're up 48%. If you just would have bought Walmart right here and just shut up, right? Put $1,000 right here and just shut up, you would have been up 59% automatically in February for doing absolutely nothing. You're still clocking in, right? You're still trading time for money, but your money is still working for you. Money is still working for money while you're at your job. That is the power of investing. And you don't have to call your employees. You don't have to go cover up for somebody because they couldn't work in. It is not, you're technically not working as hard as you would in a business. That's why I love the game of investing. You can sit at an airport, book your flight to Miami, you're looking at a stock, okay, I like this, I'm buying right here. Or you look at some futures, you look at some cryptos that you want to swing trade. All right, I'm going to Miami the next couple hours. I'm gonna place my trade. Okay, I'm getting 500 back. Sell. There we go. Set some money aside for capital gains, and you're good to go. Right? That is the power of investing that every school should teach. Don't only tell you about the Great Depression, they need to tell you how to work with your paychecks, save, invest, and make the money, because that is how you break the cycle of just working and working and working. It is not bad to work. Don't get me wrong, guys. It is not bad to work. Because what working does is it gives you strong capital, right? But it's really bad to work and start chasing a lifestyle that you haven't earned yet, okay? So key takeaways is invest consistently, even with small amounts. And as you get older, you get a better job. You make 60, 70, I think 70, 80K a year is a sweet spot. Okay. If I do some calculations and you're making 70,000 a year, you're making about, let's say, 5,200 a month. So 5,200 a month. If you're making 5,200 a month bi-weekly, you're getting 2,600. And out of 2,600, if you can invest 1,000, that's 2,000 in a month. Okay, 2,000 in a month can work wonders. Know how to budget your paychecks first of all, because if you're making 2,600 bi-weekly, now this is not going to happen instantly, right? You're not going to make this in high school. You're not going to make this straight out of college. It's going to take some time, right? But if you're 24, 25, making 2,600 a month, set aside 1,000. Okay, each paycheck you get paid bi-weekly, right? In a month, you're going to have 2,000 invested, and save less when you're younger. Okay, focus more on investing. Still save money, right? But if you have 40K saved, have about 70, 60K invested. Okay, that is the way to do it when you're younger. Now, 2,000, right? This is what I do. I always calculate 2,000 after 10 years. Okay, or let's not even go 10 years. Let's do 5 years. Okay, if you're investing 2,000 in 5 years, you're gonna have $120,000 invested. So, and this, if you spread this between one ETF, okay, I want the S&P 500, and I want 30,000 in, let's say, Nvidia, 30,000, Walmart, whatever the case may be, you're going to make the money that you want to make. You're going to be up 45, 35% on these stocks, and you're going to be seeing that that 120,000 you have invested is really going to be worth about 195, 200,000. So you're making back, let's say your investments go to 190K in 1, 2, 3. Okay, I have a calculator on the side. So let's say your investments go up to 190K. So you're making $70,000 additional income in 5 years, right? That you're technically not working for. So additional is 70K, and these are just buy and holds. These are just buying and holding. And after you pay your taxes, whatever, you say, let's say you walk out with 50K. So you made 50K in 5 years with your money just sitting there and you basically not doing absolutely nothing. Ignore the noise, block out the noise, block out the news, and just buy and hold, right? That is the power of investing, all right? Now, use ETFs like SPY, QQQM to reduce risk while learning. Follow companies you understand believe in. Under 18, start on Cash App. Time for it frame is very important. Get through the learning curve, all right? Thank you guys for watching. That is it. I just want to talk about how important saving money is, how important financial literacy is. A lot of schools, a lot of classes, you don't learn that, right? You're learning these stupid formulas and functions that you're pretty much never going to use for the rest of your lives. But it is important to save money, to build capital, and then start investing. And then while you're investing, you still got the 9 to 5 where you're generating income from, but you're learning a high income skill like trading while you have long term to mid term investments on the side making you money as well. So you're trading money for money, you're trading time for money, and you're learning a high income skill. So the choice is yours. You make the decision. I honestly think S&P 500 is great. Walmart's great. Nvidia's great. So thank you guys for watching. Like, subscribe. Mr. BuyTheDip is out.